All right, so traders, this is the final video I will do on this euro yen setup. It's hit targets, I've taken some profit, and I want to kind of walk you through the logic behind that. I was hoping it would be like a 2 video process. Ended up being like, it's ended up being like 3.5 or something stupid. So I'm just going to wrap this up, and I want you to take this kind of ideally seriously, especially if you are wanting to increase your faith in price action, trusting price action, trying to understand the process. Also, just trying to make sure you're not going mad when you have certain trading ideas. I want to make sure that all of this stuff kind of makes sense to you. So first of all, for those of you seeing this for the very first time, there are a couple of videos in the run-up to this, which I will put in the links on that side, will be up here. And I will do that. And so watch those first to get a sense of how we get here, because you're going to understand where does the trading idea come from, and where do we look for an entry. There's a logic. It's logic and it's rational. That's what I love about technical trading. So, but a very, very quick recap. So first of all, the idea was we were looking, all the yen pairs were looking really nice and bullish. We were looking for a nice breakout of a flat level, which we got. And then what I was looking for was a pullback and a takeoff. Okay, and then this was on the tail end of last week, so now it's Tuesday, and what actually happened was on Sunday I did a market analysis and I spoke about what the markets are doing, and they were starting to look more and more bullish. So the goal was using the daily for the direction and the concept, and then looking for an entry on the 15 minutes. Excuse me. And so where we landed up on Sunday night was probably about here with this green candle on the right hand side. That was literally what was in my Sunday night analysis, weekly analysis, and off a little bit here. And I said, look, it does look bullish. I can see it's trying to turn around, but Sunday nights are a little bit funny. And actually, that's kind of what happened. So Sunday, and again, Sunday nights are very funny. And the market ended up correcting down a little bit bigger. That's fine, a little bit further down. Started trying to slow down, still in this kind of area. This is where it starts to get really interesting. So here's where we start to get a bit of a base. We start to see more and more of this. Now, what I should tell you this is important. So for those of you who are wanting to learn price action, it's important that I mention what happened in my brain when I see this. My brain has become particularly susceptible to double bottoms. Okay, so to double bottoms or triple bottoms where prices rejected those levels from a level of support, my brain has become particularly good at observing those. That's how I was able to call the bottom of the last bear market a few months ago, because I saw a double bottom on the S&P, started to see all those things. That's how I was able to call the bottom of gold, because I saw that double bottom. So it's not necessarily a whole lot of skill, just the fact that particular, I've got an eye for when the market is starting to go from bearish to bullish, particularly, and there's often a lot of bullish signs. Okay, so anyway, starting to see the stuff happen, we start to break up here. So here's the thing. Now what's actually happening is, and this is kind of broad idea, again, broadly, you've got a downtrend here. So please ignore, these are all the different arrows as to where we were hypothesizing where price could pull back to, and therefore we'd be looking for an entry. And that wasn't actually this, because here's where it gets interesting. You've got this downward trend line, and you've got a general trend, downtrend on that 15 minutes, and then it breaches the trend line. So my rule for using trend lines is not necessarily for getting into trades. It's using a trend line to mark a line in the angle of momentum. Is it a bearish momentum? Is it shifting to sideways? Is it shifting to bullish? Is it shifting to bearish? So that becomes a line in the sand that's saying, you know what, that bearish momentum has broken and it's now going more sideways. Then that tells me, okay, good. That means that now we might be turning around and going up. So then what you do is you start to look, we've definitely got a bit of a level of resistance, and I wake up. So now remember that it's Monday and Tuesday, next day kind of come in, and there we start to kind of take off. We start to take off and eventually break out. This is where we are currently. So this is Tuesday, the 15th of August. This is where we are now. And so actually there were a couple of setups that I like. So I didn't want to record another video, which would have made that 2 pre-videos plus the Sunday night analysis plus the Monday another update video where I saw an actual setup. So instead what I did was I went to my channel page over here and I said, look, I'm still stalking Euro Yen today on the 15-minute time frame. I didn't want to bore you with another video, but essentially what I started to observe was that, I'm looking for that link, I apologize, trying to observe that I started to see, it's very hard to see it here, go down, started to see a nice bullish candle that's set up here, and so I thought, okay, well this is maybe the start of where we're going to go, so possibly that's going to set it up. Anyway, and so when you look at the chart, you start to see a few of these setups start to set up in different areas. So here you've got a potential setup which you could have taken as a double bottom. Absolutely, this would have been a very viable setup. It's now, if you didn't see that, if you didn't trust that, because here it wasn't enough information, it came up and it broke that high, and it broke the downward trend line. So now that bearish momentum is definitely out of the way. And depending on where you draw your trend lines, which is why they're so painful, you might even argue that prices come back to find support on the other side. I don't like to do that because it becomes very subjective, and one day you've put it in the right place by chance, the next day you've put it somewhere else. I don't like to do that. So it's just meant to be a bearish line in the sand. Price comes back down, but definitely finds support again at this third place and produces actually a little bit of a double bottom on a much lower time frame, 1 minute time frame. Comes back up and starts looking below. So that was definitely a clue. That's 3 o'clock in the afternoon. I was on a call, couldn't take that. Price then comes back up. It's definitely now starting to turn around. You've got a couple of setups here. These start to look more and more bullish. So you've got quite a few little setups here where now you're rejecting, you're producing basically a triple bottom and lots of little rejections, and all at a higher level. So look at where we've come from. We've had that correction to the downside, which is all I ever wanted. So when you look at it from a higher perspective, this is your 4 hour. You had price breakout, pull back, and take off. And look at these bullish candles. Could I have traded these? Absolutely. That was a bullish candle. If you were nervous about that, entry above the high, stop loss below the low here, stop loss below the low here, and so on. Whichever way you want to do it, price is going. Look at the 1 hour. The 1 hour looks a lot clearer. To me, this is a brazen triple bottom. You've got a nice rejection there, another one there, and then another engulfing bullish candle. That is a loud and clear entry into it. I don't know if you see that, but I see that. Entry above the high, stop loss below here or below there. Either thing, you want to do that. Anyway, price eventually is also at the same time, frustratingly, is also hitting resistance at this point. Point is, if you took this trade, ultimately you would have gone to bed and woken up this morning and it's gone through. I would have considered taking some profit ahead of this level. It's clearly there. We've broken through it, and that makes sense. The reason it makes sense that we would ultimately break through it is the daily. It's the daily. We went up here, down, and continuing. So the daily momentum is what is ultimately going to break it through that. But if you were just looking at the 1 hour, the 4 hour, you'd be like, price is never going to go through it. So what did I do? I took 2 entries to satisfy my curiosity on these trades. I basically took these 2 trades here. I took a 3 lot and a 1 lot. The 3 lot has a much closer stop loss. The stop loss is just below the candle. The 1 lot had a stop loss below a recent swing low. So slightly wider stop loss. Both of them had targets close to each other. The only reason they're not identical is because I wanted to make sure that my profit would be worthwhile, and then to take them. So both of the trades, took both the trades as a point of that, and basically they both hit target below here. My target was just below this level of resistance for the purposes of this video, so that I could close out the trades and go, okay, that's it, done. So this morning, effectively, I hit my target just below here, which means I would have hit it about 7:30. Excuse me. Anyway, and so that is it. So just to recap, because we're running at 8 minutes, this was a trade idea from start to finish. I knew the direction in which I wanted to go, which should make sense to you. If you don't forget you can watch those videos. I roughly knew where I was looking for an entry, and then I was just really waiting for a signal. I'm looking for a signal from the markets to tell me where I can get in. And you can see how these levels of pivot levels as well as support resistance levels held up. Frustratingly, again, and I did talk about it in a previous video, I spoke about how you might get a double bottom. So you might get price coming down here, producing a double bottom before taking off. We got multiples. We got multiple bounces off a level of support and then resistance up here. And then at that level, we got multiple bounces within a range on a level of support before it finally broke out. And in any of these situations, guys and girls, you could have put an entry above here. Let's say you hadn't gotten in yet. Put an entry above that range, stop loss below the range, and take it on the breakout. So the big concept to take away from this today is, why did we select this chart? Why did we think it was going to go up rather than down? And then it becomes a question of, okay, how do we get in? And we had multiple discussions in all the videos. We could get in on a range, we could get in on a single candlestick, we could get in on the retest. What would we need to see on a retest of that support level? Where would we put our stop loss? Where would we take profit? Okay, it's all included in previous videos, but for now, I consider this over. Can I take more trades on it? Absolutely. The 1 hour is not that overextended. We've just broken through this level of resistance. What does that mean? It means I can rinse and repeat. Rinse and repeat, meaning broke it through it, wait for it to come back to retest support, look for another shot to the upside. Okay, we've just kind of broken through this level. That means that my next potential trade idea could be when price comes back to test the 159.21 level for a potential support level and take it from there. Maybe I want to go a little bit risky and throw in a bit of a trend line here and go on an adventure, wait for the next pullback to that level. Sure. But remember, if we're looking for it on the 15-minute, we're targeting 3 to 1. We're targeting 3 to 1, taking partial profits, trailing our stop loss. And when that trade is over, we hit our targets or we take partial profits and get stopped out, we just wait for the next setup. So this is why trading, you're supposed to do this. You're not supposed to try to get in once and ride it forever. You take your trade setup, you take that trade. Because maybe today something comes out from the Bank of Japan and then all the yen pairs completely reverse. So traders, this is what traders do. You prepare for the worst and you hope for the best. And so when there's profit, you're close to your 3 to 1 and that's your rule. You take the profit, close the trade, thank you very much, I'm done. Then you look for another setup, you qualify the setup if it's there. And this is how you grow your account. You compound it through multiple trades. Okay, you could take another trade, another second setup if your first setup is at break even. There are reasons you can do that. So if your first setup, if the risk is covered, you can take a second setup if it meets the criteria and you manage the risk appropriately. Remember, you don't always have to add more risk to a trade. You can add less risk. If you're scared, you want to put 1% risk on the first setup and then add another 0.5% on the second setup, you can do that. Don't add more risk. Okay. Anyway, I'll leave you with that. Hopefully you have found this instructive and useful. And if you have, let me know in the comment section and I'll do more like this as I go through live setups. And ideally, if I find something this week, I will do it as well. All right.